OZ Sherpa Ashley Tyson here, founder of OZPros.com. So today we're talking about opportunity zones. So the first time that I heard the word opportunity zones, I was in a CLE that was in this huge auditorium down in downtown Charlotte. And I was in the business of helping people groom their businesses for sale so that they could put more money in their pocket when they exited. And this CLE was specifically on tax mitigation strategies and succession planning, and also on estate planning for high net worth individuals and what happens in that. And so we had a sponsor that funded lunch, and it was a fantastic lunch. I had some big cookies in there. And so coming out of that, you're like in a food coma. And so after the lunch, we're sitting in there, and there's a gentleman from one of the big accounting firms, and he's up on stage. And you get the picture. This is a full auditorium. This is like where they play basketball in this college down in Charlotte. And the guy has this monotone voice, and he's talking about the Tax Cut and Jobs Act of 2017, and he's going on. And so literally like half the room is like dozing off because that lunch was so good. And so as he's going through the 1,700 pages of the Tax Cut and Jobs Act, he gets to this point in time where he says, and in the Tax Cut and Jobs Act, there were 3 pages that talked about these things called opportunity zones. And as soon as I heard the word opportunity zones, I perked up. And I was like, I need to pay attention to this. And he talked about what opportunity zones were and the implications of what could happen if you invest capital gains into an opportunity zone. And so I start going, wow, this is really interesting. It's like, I want to make sure that I heard what I thought I heard, because it wasn't just the food, right? Those cookies talking to me after lunch. And so I ran him down in the hall afterwards, and I was like, hey, man, from what you just said, it sounded like, opportunity zones it's like private equity in 1031 got married. And he said, oh, yeah, they had a beautiful baby named Opportunity Zones. And I was like, dude, thank you so much. I ran back inside to the event. I popped up my GoDaddy account. I started taking down all types of domains associated with opportunity zones. I was like, OZ, right? And Oz, advisors, and Oz rollover, and, all types of different domains. And so many that, in fact, that my assistant ended up changing my GoDaddy account password so that I couldn't do that again. And so, after that, we got back together as a group, and I told them how excited I was about it. And they're like, oh, great, another shiny ball from the visionary over here. And I was like, no, guys, I really think that this is, that this really is the answer. That for the first time, Congress has actually done something that I think is going to get the attention of private capital. And it's going to do it in a way that's going to be helpful and impactful for communities that really need investment. And so they were like, they were still kind of doubtful. I said, listen, all I'm asking you to do, let's just pop up a website and let's generally describe the program, and then let's see what kind of response we get from that. Let's buy a couple of keywords, and let's see what kind of traffic we get. Well, in 2 weeks, we had 150 inbound leads and about $50 million worth of capital that were looking for deals in opportunity zones. And my team was like, holy cow, I think we found something. And so that began our journey into opportunity zones. And we have never looked back. So for the last 4 years, since May of 2018, I've breathed, and slept opportunity zones. So much so that even recently, I didn't have one last night, but I've started dreaming in opportunity zonees, right? So they say that when you speak a foreign language and you start dreaming in that foreign language, that that you've arrived, that that you're fluent. Well, I've started dreaming and having dreams where I'm talking, in the language of opportunity zones, QoS and QoZBs and QoZBP. And so it's a good thing that I wasn't playing a drinking game in my dream where we had to drink every time somebody said the word opportunity, because then it would have been a bad scene. But I love opportunity zones, and it's been a game changer for my family and also for numerous families that we've helped along the way. And so in this webinar, we are going to show you how the only way, or at least the best way, to build generational wealth through tax savings, and to do well by doing good is through the Opportunity Zone program. So God bless the drafters of the legislation that in 3 pages they were able to accomplish what no other legislation had created before. Number one, they got the attention of private capital, because they did. Number two, they got it off the sidelines. And number three, they made it patient, and they got investment into areas that needed it the most. In this webinar, we're going to show you how to build generational wealth through tax savings offered by Opportunity Zones. The other thing that we're going to show you is how to do well by doing good. And that's the greatest thing about Opportunity Zones. You know, I had a mentor of mine who helped me with a lot of different financial stuff, and he told me that, you know, the 8th wonder of the world is compound interest. And then he said the 9th wonder of the world is tax-free compound interest. And that's the greatest thing about Opportunity Zones, is that you're getting compound interest, but it's coming back to you and ultimately to the next generation through no taxes. And that's the name of the game, folks. The U.S. government is going to be your number one vendor over the course of your life. You're going to pay more money to the United States government than you will to any other institution. So just think about that for a little bit. And so if there's anything that you can do in order to cut that number down, then you need to be doing it. And so if you can imagine not only cutting that number down, paying less money to Uncle Sam, but also putting it into an area that's going to actually benefit the people that really need it the most, then once you have somebody that can take your hand and they can walk you through the process, man, all of a sudden it gets clear. And it's not that scary. It's not that complicated. And holy crap, are the results worth it? And so that's what we did. We repurposed that system, and we said we are going to be the firm that brings Wall Street level sophistication to Main Street America. We are going to democratize access to Opportunity Zones so that people just like you, who are the backbone of the American economy, the business owners, the small-time real estate developers, you know, the people that are exiting things and have capital gains, but that don't want to give it away, or that are, you know, that are a little bit cynical about other big firms and stuff like that are out there. We wanted to put the power of Opportunity Zones into your hands. And so that's why we created Opportunity Zone, OZPros, and the Opportunity Zone consulting that we do. So who is that? Who's that for? Who are Opportunity Zones for? It's people just like you. It's investors. It's entrepreneurs. It's business owners that have an appreciated business that they're either getting ready to sell or may sell in the future, or who have sold it within the last, year or so. It's folks that have any kind of capital gain. Capital gain could come from crypto gains. It could come from, the sale of a baseball card. It could come from the sale of appreciated gold. It could come from anywhere that there's a capital gain. But that's not all who it's for. It's for anybody that owns property in an Opportunity Zone, who wants to take advantage of the Opportunity Zones. And it's for anybody who's contemplating building a business that they think is going to sell for an extended amount down the road. So if you think that that business you're building is going to be valuable down the road, then you need to do it in an Opportunity Zone. Before you met the OZ Sherpa, your only alternative was to scour the internet for information. And when you did, you either got a bunch of, ads for funds to invest in, or you got really in-depth articles from, Opportunity Zone experts that had like in the weeds, white papers on an arcane topic inside of Opportunity Zones and about Opportunity Zones. Or you had to drop a $50,000 retainer to a white shoe firm to even get them to be able to return your phone call. Or you had to send money to a retail sponsor. You had to get them on a phone, and you had to act like you were going to invest so that they could talk to you and answer your questions about Opportunity Zones. Or you had to go and you had to call your local CPA or your existing attorney that you love, and I'm not knocking them, but they probably didn't know a whole lot about opportunity zones when you talked to them about it. Or if they did, it had been based on an internet search that they were either doing it right before they got on the phone with you or while they were on the phone with you. And then you got to hope and pray that they know what they're doing, or that they call me and that I help them to figure out exactly how to do it. So we originally founded OZPros to be the legal Zoom for opportunity zones. But even with that, right? So even with having access to the videos and the actual forms and all that kind of stuff that we had on our website, it was still tough for people to understand exactly how to do it. And so we modified it and we changed OZPros to be a full-service opportunity zone advisory firm, right? Once again, here to democratize access to opportunity zones by helping you navigate the opportunity zone fund and business creation process. And we do it through education, products, and advisory work. So our goal is to help people actually do opportunity zones, to go into that mountain and to say, okay, even though I don't necessarily know this right away, man, the Sherpa is guiding me along the exact path that I need to be taking. He's here to answer my questions. He's here to give me helpful pointers along the way. He's here to help me to say, oh, no, don't go up that place because it's too steep. Let's go around this way because it's going to be a little easier. And so that's what we're here to do. We're here to make sure that you understand this in a way that you're able to actually do it and put it to work in order to build generational wealth for you and your family, and to do good in your community while you're doing it. All right, we're taking the express elevator to the top of the Opportunity Zone mountain, and that express elevator is also known as the Opportunity Zone cheat sheet. So we've got all kinds of videos and other kind of information and details and that kind of thing that supplements the Opportunity Zone cheat sheet, and you can find that on our YouTube channel. You can reach out to us. I think that the fastest way to get a PhD in opportunity zones is to join our Opportunity Zone think tank, which happens every Tuesday from 10 to 11:30. Join us there, and you can discuss all of these things, expound upon them, get more information, and you can get your PhD in opportunity zones as well. But I'm going to go, because of that, I'm going to go kind of fast through this so that it's an exercise in big picture stuff. If you want to drill down to it, schedule a strategy call, and we can get your questions answered specifically. But here we go. So in Opportunity Zone land, the key thing, and unfortunately the drafters of the legislation required this, but you got to start with a capital gain from a sale to an unrelated party. So you can't take that hand turkey that you made in kindergarten and sell it to your mom for $1 million and invest that into an opportunity fund and have it count. It's got to be to an unrelated party. And it can't be any kind of relation up or down. Now, if it's side to side, that's actually probably okay, but we could get into the specifics of what constitutes an unrelated party. And that can be from any kind of capital gain, long-term, short-term, sale of stock, sale of gold, sale of an appreciated baseball card, cryptocurrency. It doesn't matter. As long as it's a capital gain that's going to get reported on your 8949, you need to drop that into a qualified opportunity fund within 180 days. And if you do that, you cut off the clock. Now, you can start that 180 days at other points in time if it comes through a K1. So S-Corps or partnerships, you can start those at either the end of the partnership tax year or March 15th. So what that effectively allows us to do is to go all the way back, right? So for somebody that had a gain January 1st, 2022 through a partnership, they still have until September of this year to get that into a qualified opportunity fund. Once the money's into your qualified opportunity fund, you have a period of time in order to invest that into either qualified opportunity zone business property, right? And you can own that directly out of your fund. Your fund's got to own 90% qualified opportunity zone property, and that's tested on a twice annual basis. So, because you have to meet this 90% test, that's going to be tested on the last day of the first 6-month period of the fund's taxable year, or on the last day of the fund's taxable year. And so if effectively what this means is that if you put your money in between now and June 30th, your first test is going to be either July 31st, August 30th, September 31st, that kind of thing. Or, and when that test happens, if you still hold it in cash, you get to exclude the cash that came in during the previous 6 months. And then that then kicks you to the next testing period, which would be December 31st. So for all intents and purposes, if it's between January 1st and June 30th, right, if your money comes in and you still hold it in cash, your first test date is going to be December 31st. If you fund between July 1st, right, and December 31st, your test date is going to be the last day of the fund's taxable year. But once again, you get to exclude that cash, and that kicks you to June 30th of the following year. So you get effectively between 6 months and a year in order to put your money into qualified opportunity zone property. Now, you can either do that by making a direct investment into opportunity zone business property, and the definition of that is that it's tangible property used in a trade or business acquired after December 31st, 2017 by purchase from an unrelated seller or by lease, and the original use or substantial improvement happens in an opportunity zone. So what does this mean? It means that it's actually something tangible, right? So it's property, it's whatever. And to the extent that it is property, then you're going to need to make sure that it's either original use, right? Which means that it has never been put in service. So that means it's not been depreciated, it hasn't been rented, and it's close as possible to the certificate of occupancy, but that's not a bright line test. And so that means that you could buy a shopping center or development before it's complete, right? So this is one of the places where I say that you could probably get away with just having a QOF where you don't need a QOZP. Is that if you're buying something that's brand new construction and that's all you're going to buy, and you can get comfortable that it is original use, then yes, just set up a QOF and own it directly. But for all other purposes, right, for pretty much anything else, it's going to, if it's not original use, it's going to require that it be substantial improved. And that means that during any 30-month period, beginning after the date of the acquisition, that you've made additions to the basis equal to the then existing basis. So what that means in English is that if you're buying this piece of property for $1 million, right, and it's got a building on it that's worth $550K, you're going to have to put $550,001 into it. So you can imagine that if you're having to meet a test relative to a 90% test, and you've got to substantially improve, an apartment building or a house or whatever it is, that it's going to be tough to spend all that money inside of 6 months to a year. So the regulators gave us a bone, and they said, hey, you can also, if you want to, right, meet this 90% test by investing into qualified opportunity zone partnership interest or corporation stock. And so what that effectively means is that you can invest into a qualified opportunity zone business, which once again is just an LLC tax as a partnership, just like your fund. It's just an LLC tax as a partnership or a corporation, and that it's specifically organized for investing in opportunity zone property. So if you do that, once you drop your money into the QOZB, you've met that 90% test. So on almost all deals, except for ones where you can actually invest into something that's brand new, I am recommending that you invest through a qualified opportunity zone business from your QOF. And so once you've got the money down into your QOZB, there's 5 tests that a QOZB needs to, that needs to comply with in order to qualify and to be validated as a qualified opportunity zone business. And these tests are a little bit broken down, and they're broken down a little bit easier here, a little bit easier to see, is that 70% of your tangible assets must be qualified opportunity zone business property, right? And so we went back up there, and we go back up to our handy dandy opportunity zone cheat sheet, our express elevator to the top of that tax-free mountain, right? And we look, and so the meaning of this 70% of qualified opportunity zone business property is over here. And we just went through that, right? It's tangible property used in a trade or business acquired after December 31st, 2017 by purchase from an unrelated seller or by lease, and the original use or substantial improvement happens in an opportunity zone. So if you can hit that test, you've got the property part of that licked. And so For somebody that's doing a deal and it's just in an opportunity zone, this 70%, especially if it's on property that's in a zone, that 70% test is going to be a layup. It's going to be really easy to hit. Now, if you got an operating business, then it's a little bit more difficult, right? And you just need to pay attention to these tests a little bit more. Still not difficult to hit, but maybe just a little bit more that you got to pay attention to, including the second test, which is that 50% of your gross income needs to come from a trade or business happening inside of the opportunity zone. So how is that tested? Well, it's really easy, right? It's all about where your employees are. And that means that at least 50% of the total comp needs to be paid to workers inside of the zone. 50% of the total hours worked need to be worked inside of the zone, or your tangible property and management home run to the zone, which means that your employees regularly use the Opportunity Zone office in the course of carrying out their duties, and they're managed directly, actively, and daily on a substantial basis by somebody who's working in the zone. So how do you keep track of that? Because the great thing about this program is you don't have to ask permission from anybody, but you do have to keep an awesome audit trail. That's the name of the game. It's all about your audit trail, that you can prove the position that you're taking. So the easy one is that you put, anklets on all your employees and you geolocate them to exactly where they are. And if they're not down with that, then the baseline is going to be that you get them to sign a certification, or you have an actual physical, clock, right, where they punch clock in at an opportunity zone. I had I've got a client that's actually operating in a zone, and he runs a pool company. And so his guys are out doing work outside the zone, but they come back to the opportunity zone to have sales meetings, to get their stuff. And they got somebody that's dispatching them that's working inside of the opportunity zone office. And they're keeping track of that, right? They're shooting drone shots of all their people back. And then they've got, regular things where the people are signing in for sales meetings and that kind of thing. And so that's the key, is that it's all about your audit trail. The third test is that a substantial portion of your intangible property needs to be used in the trade or business that's happening in the opportunity zone. That's actually not that hard to meet. Unless you're a patent troll and you're off balance sheeting your IP, you're going to hit that test. And then the fourth test is that you can't have more than 5% non-qualified financial property, right? And non-qualified financial property is cash, stocks, bonds, accounts receivable, that kind of thing. So what that means is that it effectively gives us a two-story house for our QOF and our QOZB, because you can't have another opportunity fund invest into another opportunity fund. That is a no-no. And you can't have a QOZB own a portion of another QOZB, because that will be non-qualified financial property, and more than likely it's going to bust you out of this requirement over here. So one of the ways that, and one of the things that I've had people be concerned about is they're like, well, hey, Sherpa, I'm raising $1 million inside of my QOF, and I got to drop that down to the QOZB, and I'm not going to be able to spend that $1 million very quickly. And so what about that, violating this non-qualified financial property requirement? Well, the good news is that once again, the regulators were very kind in the second set of regulations, and they said that as long as you have a plan for how you're going to spend that money, we're going to exempt that out under a working capital safe harbor, and that's not going to apply to that 5% test. Other things that don't apply to that is actual money that you use for working capital. That's going to be exempted out from that 5% test as well. And so if you run this to ground, and if you actually comply with these tests, right, anything that's owned by your QOF after a 10-year hold, right, whether it's QOZB interest or whether it's properties or whether it's equipment that's owned by an operating company QOZB, it is going to be eligible for a step up in basis to fair market value, right? That's the big third benefit that's here. And in reality, that's the fourth benefit, is that a step up in basis to fair market value also eliminates depreciation recapture. And so that can be huge, because you can effectively utilize all of the depreciation that's happening inside of your investments that you're making through your QOF and into your QOZB to offset taxes that you would otherwise pay through the depreciation losses, and then you're not going to have to pay recapture. So That's Opportunity Zones on a page, the express elevator to the top of the Opportunity Zone mountain. If you've got questions or you want to know more about Opportunity Zones, set a strategy call today or get us to help you set up your qualified opportunity fund so you can get in the zone. Opportunity Zones have been a game changer for me and my family. And I'm so stoked that you participated in this webinar and that you got all the way to the end of it, for allowing me, the OZ Sherpa, and my highly specialized team at OZPros to help guide you along your journey to the tax savings summit of Mount OZ. Our mission at OZPros is to do well by doing good, and Opportunity Zones have proven to be the best program to allow us to do exactly that, to help others while also building generational wealth that's fun and meaningful. So your next step along your journey is to set up a strategy call with myself or with my senior OZ specialist to talk about your goals and the best way that we're going to help you to achieve them. We stand by our Opportunity Zone strategy calls with a guarantee. If you don't get value out of the call, you don't pay. You get your money back, no questions asked. So schedule your strategy call with confidence today by clicking the link below or by going to OZPros.com right now. I'm really looking forward to trekking alongside you to the Purposeful Tax Savings Summit of Mount OZ. This is OZ Sherpa Ashley Tyson, out.